If you are self-employed in Canada, this is a must-watch video because I talk about how to qualify for a mortgage as a business owner. And a very special bonus here is I will talk about stated income, where you can know how to qualify for a higher mortgage regardless of the income on your personal taxes or your business financials. So stay tuned. But a quick introduction, my name is Raghav Manchanda. I am an alternate mortgage expert with 7 Lending, where we help business owners like yourself understand and help them get approved for their next mortgage. So let's get started. So we're gonna get right to it, but before we go into detail, I want to quickly show the different kinds of lenders which work with self-employed professionals or business owners in Canada. So the first category is the most common category, known as e-lenders. These includes banks like TD, Scotia, CIBC, so on and so forth. Most of us have heard of them. As I go through the categories, I'll give you some examples, but in the next slide, I will tell you how it differentiates how to qualify as a self-employed professional with them. The second kind of lenders, commonly known as alternate lenders, some call them B lenders, are big financial institutions. They are companies like Equitable Bank, Home Trust, like big finance companies, but they do make certain income exceptions or have certain different ratios than a traditional bank and are able to often come up with innovative solutions. The third kind of lenders are private lenders. Now, this can include private individuals or this can include mortgage investment corporations. Now, as you know now, these are the 3 kinds of lenders. We will dig deeper in the next slide on what are the things they ask for. So, number 1, with A lenders and TD Scotia, this is the most common kind of mortgage lenders out there. But because they are so strictly regulated and they have such a tight box, they usually ask for the most amount of documents. Typically, you'll need your 2 years NOA, 2 years business financials, sometimes interim financials, projected financials, T1 generals, personal taxes, bank statements. Your personal taxes must be up to date, your company tax must be up to date, so on and so forth. But they base majority of their decision based on the net income either you report personally or the net income after taxes. Now, there are a few exceptions to this, but this is the most common way of the mortgage. However, what is a big pitfall is a lot of business owners, their business may gross huge amounts of money, but they all want to save on taxes. And not that I'm recommending this, but they write off so many more expenses that the net income they're left with is low, even if they have a higher income. This is where B lenders come in, because they have special programs such as a stated income program or a bank statement program where they can base their income on 6 to 12 months of bank statements. And I will come to this more in depth later. Then the third category of lenders are private lenders. Now, within these lenders, often these lenders do not ask for any income proof, but what they do ask for sometimes is an income you state, and in some cases they might ask for bank statements or something else to see cash flow. Now, coming to the special thing I've talked about, stated income, is gonna be the focus of this particular presentation, because I found this is to be one of the most innovative options for a mortgage, and I have personally used this for my own purchases. Now, as a business owner, we can have good revenue, but we do have so many expenses which we show in the business, and often it just makes sense to have more expenses to make sure our taxable income makes sense. We can be smart about our tax strategy, so on and so forth. So in a stated income program, we take it to a financial institution. They will look at your deposits for the last 6 to 12 months. They will see, oh, let's say you're an electrician and the total deposits are $500,000 for the year. Well, what would be common expenses for an electrician? And you make a self-declared form with your mortgage broker. And they arrive on the conclusion that, hey, based on the bank statements on your declaration, you have expenses about $200,000. Then they will take $300,000 as your income, regardless of what you've shown in your personal taxes or business net income. And this helps you qualify for much more. Now, this is really common for a lot of tradesmen, self-employed one-person operation, unincorporated business owners, and even incorporated business owners. And I have personally used this way often. So in the next slide, I want to talk to you about an actual example of an electrician we just helped in qualifying for a really good market. So now I will take an example for an electrician who we just helped in qualifying for a mortgage and helped him qualify for much more. Now, this particular electrician was getting annual deposits for about $250,000 in his business. These were calculated by seeing the deposits every month and adding them for all 12 months. But he only reported $50,000 in his net income in his personal taxes. Had he gone to a traditional bank, they would have done his mortgage qualification on $50,000 of income, which would not have qualified for much. But because he had good deposits of $250,000, we helped him qualify for the stated income program because he did not have that many of expenses to run his business, being an electrician by himself. And we were able to qualify him for a $900,000 purchase of a townhouse in the Lower Mainland. He got a 5-point-some% rate as of October 2024. And one thing to know is these programs usually have a fee portion attached to it. But even then, in his particular case, had he reported $100,000 or $150,000 in income, the amount of more taxes he had to pay was much higher than the cost of paying half or 1% higher than a typical bank mortgage rate, but it helped him get the house and get his first home in Lower Mainland. Another example we did was we helped someone use private lending to effectively get a really good deal on the market. Now, this particular individual is currently a realtor, but of course, with the way market is, they were not having a lot of current deposits in their business. They had really healthy income coming from abroad, as well as a really healthy savings from sale of assets. Now, these guys would not qualify anywhere in the traditional box of lending. But when they came to us, they wanted to buy a property which was about $1,050,000. It was a detached home, and because it in the current market, even if this was listed properly, was worth 1.2 or 1.3, so they wanted to jump on this and take advantage of the price. We got him approved with no income verification, using a private lender with a rate in the 7% range, plus the lender and broker fees. We did this as a fully open term because the goal here was that he will do some renovations and eventually flip on this when it makes sense, and he would have to pay no penalties to get out. So this is another scenario in which we help someone get a mortgage as a stated income or as a self-employed and help them close on their dream profitable project. Now, so I hope you found this useful. If you are a business owner there and have more questions on how to qualify, what numbers make sense for you, give us a call and we're here to help you get approved. Feel free to like, comment, subscribe, and follow us for more such content.